Welcome back to the Deep Dive. This is the place where we take the sources you share with us, the articles, the reports, the profiles, and we really turn them into knowledge you can use.
Yeah, we cut through the noise.
We do. We drill down into, the history, the financials, the strategy of these massive corporate entities that, they literally shape the world around us.
And today, we are going right to the top floor. We're heading to the penthouse of the commercial real estate world.
We are. We're putting a laser focus on BXP Inc. Now, you might know them by their older name, Boston Properties, Inc.
Right. And this isn't just any landlord. This is a giant, a publicly traded real estate investment trust, a REIT. And understanding their story, which goes back, 5 decades?
50 years, yeah.
It's basically like getting a master class in how urban America was built, bought, and then sold over the last half century.
Exactly. So our mission today, it's ambitious. We're going to try and distill the history, just the staggering scale, and the very precise strategic vision of one of the largest REITs in the entire U.S.
And our source stack for this is their core corporate profile. We're looking at the public record, the detailed history, and critically, their 2023 financial reports.
And trust me, this journey it's less about bricks and mortar. It's really more about high-stakes strategy, perfect timing, and a collection of assets that are, truly irreplaceable.
So when we talk about BXP, you have to get their core identity down immediately because it explains everything they do.
Okay.
They're not spread thin across all different kinds of real estate. They're not messing around with, say, logistics warehouses or data centers.
No residential apartments.
No residential, not even, your standard suburban strip mall. Their focus is almost surgically sharp. It targets what they call premier workplaces.
Let's pause there for a second. Let's define that term for the listener. What makes a premier workplace in BXP's eyes different from, say, just a nice Class A office building?
It's a combination of things. It's location, it's the quality of your tenants, and the physical building itself.
So location first.
Location is everything. Premier workplaces, for them, mean buildings in the absolute core of a central business district. We're talking about the addresses that carry real prestige.
And then the building.
It has to have top-tier amenities, cutting-edge systems, and increasingly, high-level sustainability, wellness features. The things that command top dollar from tenants.
Right. And then, crucially, they only operate in a handful of markets.
A very specific handful. 6 of the highest cost, highest demand markets in the entire United States. These are places with huge barriers to entry. It's just really, really hard for competitors to come in and build new supply.
And those 6 markets are Boston, Los Angeles, New York City, San Francisco, Seattle, and Washington, D.C.
That's it.
That incredibly narrow focus just on those high-cost gateway cities, it tells you everything about their risk appetite and, maybe more importantly, their target tenant.
Exactly. Global financial firms, top law firms, tech giants, they're targeting resilience. They are betting on the permanence of these global economic hubs.
And for you listening, understanding a REIT like BXP really matters because these companies are the true, often invisible owners of our cityscape.
They really are. They're bellwethers for the health of commercial real estate in major cities. So when BXP makes a multi-billion-dollar move, it signals where the smart money believes the future of work is actually going.
And they have the footprint to back it up. What is it? As of the end of 2023, they own something like 53.3 million net rentable square feet.
Across 188 properties, it's an enormous, incredibly concentrated footprint.
A footprint that was 5 decades in the making. Okay, let's unpack this history. Let's start at the very beginning. So we have to go way back. We're starting in 1970.
1970, it's hard to believe.
It is. This makes BXP a half-century-old company founded in Boston, and it was founded by 2 key figures who really defined its initial path. Mortimer B. Zuckerman and Edward H. Linde.
And this partnership was, was the classic blend. You had capital, vision, and then the actual operational know-how to get it done.
So break that down. Who was who?
Well, Zuckerman, who you might know from his other interests, he owned The Atlantic, the New York Daily News. He brought the financial muscle. He had the vision, the high-profile connections.
And Linde.
Linde was the real estate guy through and through. He served as president for decades, right up until he passed in 2010. He brought the deep expertise, the operational skill.
So Zuckerman was the what's and Linde was the how.
That's a great way to put it. And together, they built this reputation for really high-quality, high-profile commercial projects. They established the company's DNA right from the start.
And the original name, Boston Properties, was very literal. They started by, shaping the skyline of their home city.
You have to. You establish that local dominance, that credibility. It's essential for any developer starting out.
But they realized pretty early on that to get to the scale they wanted, they couldn't just stay in New England.
Not at all. They were thinking bigger almost right away. Which brings us to one of the most telling stories of their early ambitions. This is from 1985. This is the moment BXP really steps onto the New York stage in a very big, very memorable way. It shows not just what they could afford, but their strategic audacity.
This has to be the high-stakes drama over the New York Coliseum at Columbus Circle, right?
That is absolutely it. So in 1985, BXP gets into this highly publicized, super competitive auction to redevelop the Coliseum site.
And we should be clear, this was, and still is, an incredible piece of Manhattan real estate.
A++ real estate.
Yeah.
And BXP goes in and out bids maybe the most aggressive, most famous real estate developer of that whole era, Donald Trump.
Just the idea of a Boston firm coming down to New York and snatching that crown jewel, that must have sent shockwaves through the New York real estate world.
Oh, it was a seismic event. It wasn't just about winning the land. It was a huge statement.
It said, we're here, and we have the capital and the guts to play for the biggest trophies in the biggest market.
Exactly. A massive statement of intent.
Yeah.
But what's really fascinating here, and what I think illuminates how BXP thinks strategically, is what happened next.
Yeah.
It shows they were willing to make a clean financial move over getting bogged down in a long, risky development. They outbid Trump. They secured the land.
But they never actually built anything there.
Correct. They never proceeded with the development themselves. Instead, a while later, they sold the property.
You'd have made a huge profit.
A substantial profit. They basically benefited from the appreciated land value, which they themselves helped create by driving up the price in that auction.
So their big strategic play wasn't necessarily about taking on the construction risk, the city bureaucracy,
Right.
all of that for a decade. It was about capitalizing on the land's value right then and there.
It was financial engineering married to real estate strategy. That's the core takeaway.
And where that site is today.
It's the Time Warner Center.
Yeah.
Now the Deutsche Bank Center. So they secured this massive capital gain by flipping the site, and that cash, that just gave them more fuel to reinvest. It cemented their identity as sharp, aggressive operators who could close these big, complex deals without necessarily having to, pound the last nail.
So after that incredible strategic pivot, they then moved to actually build something in New York to show they could execute.
Yes, to prove they weren't just land flippers. In 1986, they completed 599 Lexington Avenue.
And this was their first real ground-up development in New York City.
Their first true NYC development. It's a sleek 51-story tower, still a defining part of the Midtown East skyline. It proved they could successfully manage these huge, large-scale projects outside of their home turf in Boston. This was their beachhead in New York.
So they were establishing dominance city by city, but also in terms of the quality of their tenants. And their focus then started to broaden down the East Coast, right, into the D.C. market.
Yeah, and the D.C. expansion just reinforces that focus on high-prestige, low-risk tenancy. We see this really clearly with one of their first D.C. projects. In 1990, the company started construction on the NASA headquarters.
You really can't get a more stable, higher credit tenant than the U.S. government.
Absolutely not. I mean, securing a long-term lease with NASA for their headquarters, that is the definition of a premier workplace with a premier tenant. It provides reliable, long-term cash flow, which is the absolute lifeblood of any real estate portfolio.
And that move just cemented their whole strategy. Find top-quality long-term tenants in the best locations in these high-barrier-to-entry cities.
But even that high-quality asset wasn't a forever hold for them.
Right. They eventually sold the property.
They did. And this highlights a really crucial function of a healthy REIT, which is something called capital recycling.
Okay, explain that.
So they held the NASA HQ building until 2002, and then they sold it to Hana Financial Group. This shows that while BXP develops and buys for the long term, they're also strategically willing to sell off a stabilized, highly valued asset.
To realize the returns and, critically, to recycle that capital.
That's the key, to recycle it. REITs, by law, have to distribute 90% of their taxable income back to shareholders as dividends.
So they don't hold on to a lot of cash.
Exactly. So to grow rapidly without taking on just tons of unsustainable debt, you need cash. Selling a highly appreciated, fully leased building like the NASA HQ generates a huge chunk of cash that you can then immediately put into a new higher growth development or use for an even bigger acquisition.
So it's this constant calculated turning over of assets.
To maximize growth and return on equity. The NASA sale provided the fuel for their next big wave of strategic dominance.
So those first 2 decades, that was all about proving the concept, right?
Right.
Demonstrating they had the strategy, meeting up those initial assets. But the real acceleration, the moment BXP just fundamentally transformed, came in 1997.
This is the inflection point. No question. We're talking about the shift to public ownership. This is when the private venture becomes this publicly funded institutional giant.
The initial public offering, the IPO.
The IPO in June of 1997 was the turning point. It took BXP from this private, founder-driven company that relied on a finite pool of capital to a publicly traded company on the New York Stock Exchange.
Yeah.
Now they're listed as BXP, and they're a component of the S&P 500 index.
And you can't overstate the significance of that, especially for a real estate company. Suddenly, BXP isn't just relying on their own equity or bank loans. They have access to these massive, almost limitless pools of public capital.
That public listing is the REIT superpower.
Yeah.
The IPO gave them this colossal war chest that they needed for what came next, which was this almost shocking, aggressive expansion phase.
A REIT's ability to raise money through stock offerings. That's what lets them buy these enormous, irreplaceable assets so quickly.
Which is exactly what BXP did over the next 18 months. They went on what analysts at the time immediately called a trophy hunt.
A trophy hunt that was immediate and ferocious. It really shows they had their shopping list ready to go well before the public listing.
Oh, they absolutely did. The first big move we see after the IPO in 97 was their expansion into a new city, Baltimore. In October 97, they bought 100 East Pratt Street. Most people know it as the IBM building, for $137 million.
Now, $137 million might not sound like a GM building number today, but the source notes this was a record price for Baltimore at the time.
That's the key. They set the market benchmark. BXP didn't just sneak into Baltimore. They came in and bought the single most premium building available right near the Inner Harbor.
And this established a pattern for them, didn't it?
A critical pattern. They enter a new market by setting a price record for a defining, highly visible asset. They buy the best quality, almost regardless of the immediate cost, because they believe in the long-term value of scarcity.
But 1998 was the truly defining blockbuster year. This is what showed the true scale of what they could do with that new financial power. You called it the Boston-San Francisco double punch.
It's a textbook case of efficient capital deployment. In 1998, they made two huge, geographically diverse acquisitions on opposite coasts practically at the same time.
So first, they look west.
First, they looked west. They acquired the Embarcadero Center in San Francisco.
And the Embarcadero Center isn't just one building. It's a whole complex of towers that really define the city's waterfront and financial district.
Exactly. It's a massive multi-tower complex, the price tag, about $1.2 billion.
Wow.
To drop over $1 billion on a single West Coast complex in 1998. That was a seismic event. It instantly made BXP one of the most powerful institutional owners on the West Coast. San Francisco was now their second major hub outside the Northeast.
And then in the same year, they came back home to Boston to cement their dominance there, proving they weren't forgetting their roots.
They executed this massive homecoming trophy deal. They bought the Prudential Tower and the shops at Prudential Center, both huge Boston landmarks, for $519 million.
So if you add that up, $519 million in Boston, $1.22 billion for Embarcadero. BXP deployed nearly $1.75 billion in top-tier real estate in just a few months.
In a span of a few months. It's incredible.
So how did a newly public company manage to do that, spend that much in different high-cost markets so quickly? Wasn't there a risk of just taking on too much debt right out of the gate?
That's a crucial question. And their ability to do it comes down to two things. First, the timing of the IPO was perfect. They hit the market during a really strong economic cycle, so they raised the maximum amount of capital.
And second,
the quality of the assets they were buying. Banks and investors are way more willing to lend you money against a landmark like the Prudential Center or the Embarcadero.
because they have proven track records, high occupancy.
Reliable tenants. It's much safer than lending against a speculative new development. So yeah, the debt was likely massive, but the assets were blue-chip collateral. This is how BXP so rapidly achieved both scale and influence, by only focusing on assets that are essential to the identity of their target cities.
So while they're snapping up these downtown trophies, they also showed some flexibility. They were still expanding in the D.C. area, but often in key suburban hubs where corporations were setting up shop.
Right, and this is a more nuanced strategic move. Between 2000 and 2001, their focus shifted a little to big commercial centers just outside the urban core. Specifically, they completed multiple office buildings in Reston Town Center in Northern Virginia.
And Reston was booming at that time.
Booming. It was growing into this massive hub for technology, government contractors, defense firms, all very high-quality tenants.
So they were following the premier tenants wherever they went, even if it wasn't a downtown skyscraper.
Precisely. It shows they get that premier workplaces aren't just defined by being in a central business district skyscraper. They're defined by where the high-credit, stable tenants are doing their business.
And Reston was a huge hub for that kind of tenant.
It was, and it still is. It reinforced their commitment to the entire D.C. metro area, not just inside the Beltway. So by 2001, BXP was no longer just a Boston company. They were a national institutional force anchored in 4 major markets: Boston, New York, D.C., and San Francisco.
So as BXP moves into the early 2000s, they've already set this pattern of, opportunistic sales like the NASA HQ and these high-stakes acquisitions.
Right, and we see them continuing their development strategy too, especially in D.C. They're filling out the portfolio, not just buying existing buildings.
And a good example of that is what?
The period between 2002 and 2005. They constructed 901 New York Avenue and W in Washington, D.C. And this shows that their core skill isn't just trading assets. It's being able to execute these complex, multi-year construction projects in really competitive cities.
It's a different skill set than just buying something.
A completely different skill set. It requires deep relationships with city governments, the ability to secure long-term financing. It's a balance for the portfolio. You acquire stabilized cash flow, and you develop future high-yield cash flow.
Okay, so if the last chapter was about aggressive expansion, this next one is about setting records, pushing the very boundary of what an asset could be worth. This is where it gets, I think, really interesting, particularly with one unforgettable and just incredibly timed deal in 2008.
We have to talk about the General Motors building in New York City. The GM building deal it's the stuff of legend in commercial real estate circles. Because of the price, because of the timing, and just the sheer prestige of the building itself.
I mean, this building is an icon. It's right on Fifth Avenue. It overlooks Central Park. Everyone knows it. So what were the exact details of that transaction in June of 2008?
So BXP, in partnership with some other investors, acquires the General Motors building. The number you need to remember is the price tag, $2.8 billion.
$2.8 billion. That is a staggering amount of money, even for today.
It was more than staggering. It was history-making. At that time, June 2008, $2.8 billion was the highest price ever paid for an American office building.
Ever.
It completely reset the market benchmark for trophy assets, not just in the U.S., but globally. It cemented BXP's reputation as a company that was not just willing, but able to pay a huge premium for these truly irreplaceable assets. They set the gold standard.
Now, let's drill down on the timing here, because that is absolutely critical. June 2008. The credit markets were already seizing up. The housing crisis was in full swing.
And the global financial crisis was just a few months from its peak.
Right.
That timing is just incredibly tense. BXP executes this massive deal right on the precipice of the global economic meltdown. Lehman Brothers would collapse in September, which led to this catastrophic freeze in global credit.
So for a single office building deal to clear $2.8 billion in financing right before that moment, that says a lot about BXP's stability and their access to capital.
It says everything. I mean, how do you even secure financing for a deal that big in June of 2008?
That's what I'm asking. It implies they must have had relationships and commitments locked in that other people just didn't.
Exactly. This is where that reputation you've built for decades and the stability of being a big REIT really pays off. First, the asset itself. The GM building is like sovereign wealth. It's the epitome of secure, long-term value. Lenders look at that collateral very differently.
And their own balance sheet must have been strong.
It was robust from the IPO and all that capital recycling we talked about. They secured the debt. They finalized the equity part just before the markets completely seized up. It was this massive financial commitment that, had it been delayed by even 3 months, would have been impossible to close.
Or at least more expensive.
Way more expensive. It was a calculated, extremely well-timed gamble that just cemented their position as an absolute titan.
So they weather the worst of the financial crisis, and seemingly they're not even deterred. They just keep hunting for icons, and a couple years later, they reinforce their Boston roots again.
They did. They used that post-crisis environment to acquire another defining piece of the Boston skyline. We're talking about the acquisition of 200 Clarendon Street.
Which everyone in Boston knows by its famous former name, the John Hancock Tower.
The John Hancock Tower, the famous I.M. Pye-designed glass building. A true symbol of the city.
And the deal for that?
In October of 2010, BXP secures this massive, architecturally significant tower for $930 million.
So this acquisition, when you combine it with the Prudential Tower they already owned, that gave BXP control of two of the three most recognizable buildings in the entire Boston skyline.
It really does. It just reinforces that core part of BXP's strategy. They own the defining architectural symbols in their target markets.
It's a strategy that's rooted in scarcity and prestige.
It is. The GM building in New York, the Pru and the Hancock in Boston, the Embarcadero in San Francisco, these aren't just addresses, they're cultural landmarks.
And owning those symbols gives them unmatched visibility.
And crucially, it lets them attract and keep the most reliable, highest-paying corporate tenants. That helps them mitigate risk in down cycles. They're essentially buying bragging rights that translate directly into premium rents and sustain high occupancy, no matter what the broader office market is doing.
So by 2012, BXP had effectively navigated the financial crisis, proved their institutional strength, and put together a collection of assets that just reads like a greatest hits of American commercial architecture.
So the next stage of BXP's evolution is really characterized by a shift back towards massive, complex, ground-up development.
So not just buying things.
Not just buying things, and often doing it through these strategic partnerships. It shows their confidence in creating value from scratch, not just acquiring existing value. And the prime example of this is the development of the Salesforce Tower in San Francisco.
And this is a really different strategic move compared to, say, the GM building acquisition.
A completely different move.
The GM building was an instant purchase of an existing icon. The Salesforce Tower was a 7-year project.
That's the crucial contrast for you to note.
Yeah.
In 2012, BXP partnered with Heinz Interest Limited Partnership, another globally respected developer, to start developing the Salesforce Tower.
This was the long game.
The ultimate long game. It required years of permitting, financing, construction, all to deliver what eventually became the tallest building in San Francisco. It just demonstrates incredible strategic patience and a real long-term commitment to that market.
And the key takeaway about that partnership is how BXP eventually took it over. They didn't just stay a partner, they systematically got to 100% control of the property by 2019.
And that 7-year timeline shows their patience and their willingness to deploy capital over the long haul to get full ownership of a trophy asset once it's stabilized and, generating reliable cash flow.
So when they bought out Heinz, what were they signaling?
They were signaling absolute, unequivocal confidence, not just in the building itself, but in the long-term economic strength of the San Francisco tech market, which, anchors that building's tenancy. Buying out a world-class partner for a full control stake that signals you believe in decades of value ahead.
Okay, let's step back for a second and look at their current corporate identity. At some point, the company streamlined its name. It went from Boston Properties, Inc. to just BXP, Inc.
Yeah, and that name change really reflects the reality of their scope. I mean, while Boston is their heritage, it's their headquarters, it's a major hub, the company's influence long ago went beyond a single city.
They're a national player.
They're a truly national player, focused on those 6 core, high-growth, high-cost cities we mentioned. BXP is just a cleaner, more corporate, more geographically representative name for an S&P 500 company whose assets stretch from LA to New York. It ensures they're not perceived as having a regional bias.
So now let's get into the current operational metrics. This is as of December 31st, 2023. And the sheer scale here is what validates every single strategic move we've talked about.
Let's put some concrete numbers to that scale for you. As of the end of 2023, BXP owned or had interests in 188 commercial real estate properties.
188. That is a huge, highly valuable, and very specifically concentrated portfolio of top-tier buildings.
And that portfolio adds up to approximately 53.3 million net rentable square feet.
It's almost hard to even visualize that amount of space.
It is. I mean, put it simply, that's roughly the equivalent of stacking up the entire office space of a medium-sized American city, and then concentrating all of it exclusively in the most expensive, highest demand parts of the country.
So for them, that concentration isn't risk, it's a concentration of value.
That's their bet. They believe that even if the broader office market slows down, the absolute best, most modern, best located spaces in these 6 cities will always outperform the rest of the market.
And we have to just emphasize that relentless strategic filter again. Premier workplaces in Boston, LA, New York, San Francisco, Seattle, and DC. That narrow, high-quality filter has defined their success for 50 years.
It's the strategic thread that ties it all together. They don't chase new markets unless those markets meet their criteria of being a global economic hub with high barriers to entry.
Right, like Seattle.
Seattle's a perfect example. It became a natural addition because of the explosive growth of its tech economy in the 2010s. BXP simply follows the capital and the high credit tenants.
And before we get into the financials, let's just briefly touch on the leadership, because the continuity there is pretty remarkable and it reinforces the consistency of their vision.
It really does. As of 2023, the key people include Owen D. Thomas as the CEO, Douglas T. Linde as president, and founder Mortimer Zuckerman is still deeply involved as the chairman.
Having Zuckerman still there as chairman over 5 decades after he co-founded the company, that says a lot about a strong, remarkably consistent corporate culture.
It's incredible. He oversaw that entire arc from this small private Boston firm to a national public multi-billion-dollar REIT. And having the founder still at the helm ensures that original mandate acquiring and developing premier, irreplaceable assets is preserved, even as the scale just multiplies exponentially.
And that continuity of leadership, especially through recessions and market shifts, must provide a lot of confidence to institutional investors.
A huge amount of confidence.
All right, now we come to the part that really provides the proof for this whole 5-decade journey: the money. We've been throwing around billions in acquisition costs, but let's review the hard figures from their 2023 10K annual report. This is so you can truly understand the operational size of BXP and how all that strategy paid off.
These numbers are the cold, hard proof of their scale and their success in this very specific premium market. So for the year ending December 31, 2023, BXP reported revenue of $3.274 billion.
Over $3 billion. And that's generated almost exclusively from leasing premier office space in just 6 metro areas.
That's right. Their net income for the year stood at $291 million. And now here's where the massive institutional nature of the company really shows up. Their total assets.
Go ahead.
Total assets were valued at $26.026 billion.
$26 billion in physical real estate skyscrapers, huge commercial complexes, prime development land.
And their total equity, which is their value after you subtract all their liabilities, stood at $8.877 billion.
Let's just pause on that $26 billion asset figure for a moment. What does that kind of asset base tell us about BXP's debt or their market exposure?
It tells us 2 critical things. First, it signifies tremendous financial leverage and borrowing capacity. When a company has $26 billion in high-quality collateral, they can get debt financing at much better rates than almost any competitor.
And the second thing?
Second, it signifies resilience. Even if market conditions get worse, that asset base, focused only on premier locations, is inherently more stable. It holds its value better than properties in secondary markets. The assets themselves are like an insurance policy against a widespread downturn.
And here's the number that I think is most surprising for a lot of listeners. Despite managing a portfolio worth over $26 billion and generating over $3.2 billion in annual revenue, the number of employees.
It is surprisingly lean. The size of the operation relative to its financial scope is a defining feature of the whole REIT business model.
So what is it?
BXP's total number of employees is just 836.
836 people. If this were a tech company or a major retailer generating that kind of revenue, they would have tens of thousands of employees.
Tens of thousands globally.
So what does this all mean? If we connect this back to the bigger picture, the financial data perfectly sums up the nature of a modern institutional REIT.
That discrepancy, that gap, it underscores BXP's precise identity. They are primarily a capital allocator and an asset manager. They are not an operational service business.
Okay, so let's break that down conversationally. Where are they saving on all that staff cost? What aren't they doing?
Well, BXP is focused on the high-level stuff. Strategy, financing, leasing, portfolio management. They're managing the leases for Salesforce, for major financial institutions. They are not running the day-to-day operations that require massive staff.
So they outsource things like security, cleaning.
They outsource many of those operational services, yes. They don't employ thousands of people running factories or call centers. The vast majority of their expenses are property upkeep, taxes, debt service, and administrative overhead. The value is locked in the physical buildings and the long-term, high credit quality of their tenant leases.
So this lean, high-asset, low-employee model is key to the capital efficiency that a modern REIT needs.
It's essential. It allows them to generate significant income with minimal human capital investment, which makes that dividend yield so reliable for investors.
And their entire market strategy is tied up in this one principle.
Just one. Investing only in premier workplaces in high-cost, high-demand metropolitan areas. That strategic thread is the reason every asset we've discussed, the stable NASA HQ, the record-breaking GM building, the iconic John Hancock Tower, and the massive Salesforce Tower, they all fit perfectly in the same portfolio.
They're buying permanence, prestige, and institutional stability.
That's it. They are essentially placing a multi-billion-dollar bet on the enduring necessity of the centralized, high-quality office experience in these global economic hubs. They believe that top-tier physical location will remain an irreplaceable competitive advantage for major global firms.
And the financial numbers, they just reflect that bet. Decades of successful execution on that one specific mandate.
Right. They're not chasing volume. They're chasing quality and scarcity. And in real estate, the value of the best locations in the best cities tends to appreciate over the long term. That makes BXP's portfolio incredibly resilient, even through economic shifts and work-from-home cycles. If the central business district survives, BXP will thrive because they own the best of it.
So this deep dive into BXP Inc., formerly Boston Properties, it's really shown us the anatomy of a truly premier REIT, a company that grew from a local Boston venture into a national institutional force, all based on strategic audacity and capital discipline.
Yeah, and if we summarize the key takeaways for you, it really boils down to three crucial strategic phases. First, that founding vision from Zuckerman and Linde back in 1970.
And that early strategic audacity, outbidding Donald Trump in '85 and then using the profits from flipping that land to fuel their initial expansion.
Exactly. Then phase two,
Yeah.
the transformative 1997 IPO. That was the financial engine that allowed them to go on that trophy hunt.
Which immediately led to those massive multi-billion-dollar acquisitions like the Embarcadero Center and the Prudential Tower, establishing national scale almost instantly.
And then third, that strategic focus on defining landmark properties, highlighted by the $2.8 billion acquisition of the GM building right before the 2008 crisis.
And the long-term commitment to development shown by them getting 100% control of the Salesforce Tower by 2019.
Those moves just cemented their status as the custodian of America's urban commercial icons.
They own the most expensive, most exclusive real estate in the country's biggest cities. It's an incredibly clear, focused, and financially proven strategy built on this idea of permanence.
Which brings us to our final provocative thought for you to consider, based on everything we've unpacked today. Given BXP's specific, unwavering focus on the scarcity of premier workplaces and their $26 billion portfolio anchored by assets like the GM building and the Salesforce Tower, how does the continued financial performance and robust asset valuation of BXP reflect the long-term perceived value and, well, the future of the American downtown office tower?
That's a great question.
They're betting billions that the absolute top tier of commercial real estate remains vital and irreplaceable, even in a world that is shifting digitally. So what does BXP's sustained success tell you about the economic future of these global gateway cities?
Food for thought indeed, as the landscape continues to evolve. Thank you for joining us for this deep dive into BXP Inc. We hope this has given you a truly well-informed shortcut into understanding the titans of commercial real estate.
We'll catch you on the next one.
We'll catch you on the next deep dive.